Top 10 US tax breaks you did not know existed and who really benefits. Hello, everyone. If we have not met, I'm Ina Volovic, and I am an IRS enrolled agent. My firm and I help individuals and businesses strategically reduce their taxes. Do you file taxes every year? Great, you're in the right place. And you'll love to hear how the US tax system is full of legal loopholes and deductions that save billions of dollars, mostly for people way richer than you and me. Today, we're breaking down 10 real tax breaks in the US from smart to shady. Some folks deducted yachts, golfs, and even charity with a profit. Let's get into it. SALT deduction, state and local taxes. If you live in a high-tax state like California or New York, thanks to the new OBBB law, you can now deduct up to $40,000 in state and local taxes from your federal tax return. And it's up from $10,000. But here is the catch. Before 2017, there was no limit. Rich folks were deducting tens of thousands. Now the gap is higher, but there is a phase out starting at incomes above $500,000 for joint or $250,000 separate filings. Still, wealthy taxpayers complain the loudest because they're missing those unlimited deductions. Home office deduction. If you're self-employed, you can deduct part of your rent or mortgage, utilities, internet, as long as you use the space exclusively for work. Sounds great, right? But if you work a regular W-2 job, sorry, this isn't for you. And if you're audited, you better not sleeping in your home office deduction. Meanwhile, rich folks, their home office might be their yacht. Depreciation, the wear and tear trick. Own business equipment or machinery? The IRS lets you deduct depreciation over time if it is still valuable and useful. Thanks to OBBBA, you can deduct now 100% of the cost immediately for eligible assets such as machinery, equipment, or qualified property improvements until 2031. Section 179 allows immediate expensing up to $2.5 million of tangible property like computers, vehicles, or machinery, but not real estate buildings themselves. For example, a factory owner can purchase $2 million in new manufacturing equipment, deducting its entire cost right away, even as the equipment helps grow their business significantly. Oil and gas depletion allowance. Yes, it still exists. If you profit from oil, gas, drilling, you deduct part of your income because the earth is running out. Reality check? Oil companies often pay less taxes than your local coffee shop. Climate change? Seems like the IRS missed the memo. Business meals. Run a business, you can deduct up to 50% of your meals. Translation: a $400 steakhouse dinner could be a business meeting. Lunch with your investor, tax break. Creative brainstorming could be also covered as your business meal deduction. You pay a full price. They deduct it from their taxes. Qualified business income deductions, QBID. Thanks to the new One Big Beautiful Bill Act, the QBID is now permanent and won't expire after 2025. There are higher income phases and deductions might be limited. A new minimum deduction of $400 is introduced for taxpayers with at least $1,000 of qualified business income who materially participate in their business. For businesses classified as specified service trades or businesses, SSTBs, deductions phases out completely above upper thresholds. This deduction is meant to help small businesses, but significantly benefit wealthy business owners who strategically structure their income. 1031 exchange, real estate tax deferral, and this one is slick. Sell a property, buy another like-kind property, delay paying capital gains taxes, possibly forever. Think monopoly, trading houses without paying the bank. It's favored among wealthy real estate investors. Not sure if you qualify for 1031 exchange? There is an alternative strategy known informally as lazy 1031. Reach out to us directly if you'd like to explore this in detail. Private foundations. Start a private foundation and you'll get major tax breaks, control over where the money goes, sometimes even ownership of your own assets. Billionaires like Gates and Bezos use foundations to channel wealth through charity while maintaining control. Capital gains, the wealth tax discount. Earn a salary, you might pay 22 to 37% in taxes. Make money from your investments, you pay only from 0 to 20. This is why millionaire investor often pays a lower rate than a school teacher. Step up in basis. Death, tax, reset. When someone dies, their heirs pay no capital gains tax on inherited property appreciation. For example, grandpa bought a house for $1 million. It's now worth $5 million. If you inherit it, the IRS resets the value to $5 million. No taxes on $4 million increase. That's how dynasties are built tax-free. And conclusion, these tax breaks are real and written right in the US Code. Some help small businesses, but most benefit those who already have wealth. The truth is simple. The more you have, the less you pay. Want a full video on offshore tricks, trusts, and how regular folks can save on these strategies too? Drop a comment and smash that like button if you're now a little more annoyed at the IRS.